The gold market ends the week on a more bullish note, but remains less reactive to market activity. As we saw in the equities yesterday, everything got sold off. Riskless assets outperformed, but again, gold didn't see that bid that we would have thought would have continued to push it higher, maybe towards extending towards the top of that range like we would have expected, maybe near 1300. Obviously, we're well below that level, but the market did rally yesterday, and today just kind of treaded water, hovering just above the 1280 level. And I think at this point, gold becomes sort of an afterthought. It used to be a leader in the risk-off trade along with the Treasury market, but now the Treasury market takes center stage, and gold has been a lagging sort of indicator of risk. And I think at this point, it's safe to say that we're going to need a major catalyst shift or event that will push gold back to those highs. The recent range, 1300 down to 1270, seems to be a very comfortable range for gold right now, and we aren't seeing the type of extensions higher that we had in previously in years past, when there was an event risk, when there was a sell-off in the equity markets, when there was something going on. And if you look at the dollar, yes, the dollar is part of that equation. The dollar hit year-to-date highs, the dollar index that is, yesterday, and today quickly sold off. Likely some profit taking. And some of the other currencies, the pound, for instance, maybe got a little over its skis to the downside, but ultimately the dollar remains very, very strong and is a very, very bullish trend. So that is also going to be weighing down on gold. But historically, we've seen gold and the dollar both rally together during specific events. And this is not, obviously, we saw it yesterday, but we aren't seeing that as a more of a macro view here anymore. The dollar strength has been hampering some of gold's ability to rally higher. Lastly, let's look at the positioning, which we don't have the numbers for today yet, but ultimately it looks like the longs liquidated prior to yesterday's rally, and probably were a big reason why we saw that move. So I think right now you're going to continue to see speculators be net long, just less long than they were over the last few weeks, and that will probably look to continue as we remain inside this range until, again, some event. Maybe it comes out of Iran, maybe it comes out of China, maybe it comes out of the UK. A lot of political mumbo-jumbo going on there. Likewise, we have data here in the Fed that will continue to either bid the dollar and soften gold, or could go vice versa if there are talk of rate cuts in the future. So right now, gold hovering in the middle of that comfort range, not seeing a whole lot of bullish momentum as we see in the Treasury market, but watch out, it could happen very quickly as gold is a very emotional commodity. And I think that if we are going to see a push to the highs, it's going to have to come on the heels of something bigger than what we saw yesterday.